Hello everyone, and welcome to my channel. Today, we're delving into a question that's been keeping investors on their toes. Will the stock market crash in October 2023? Historically, October has seen its fair share of market turbulence, with some of the most notorious crashes in financial history taking place during this month. But it's essential to keep in mind that October doesn't always spell doom and gloom for the stock market. In fact, over the long term, October has had its moments of positivity. According to Investopedia, since 1945, the S&P 500 has shown an average return of 1.1% in October. So what should we anticipate for the stock market in October 2023? Will it take a dive, or will it continue its upward trajectory? In this video, we'll explore various factors that might influence the stock market's performance, share strategies to safeguard your investments, and offer some practical advice to navigate through this potentially precarious period. Don't forget to like and subscribe so you don't miss out on new uploads. The October effect. First, let's talk about the October effect, which is the belief that stocks tend to perform poorly in October. There is some evidence to support this theory. For instance, since 1945, the S&P 500 has seen more declines than gains in October. However, it's vital to recognize that the October effect is not an absolute prophecy. There have been many years when stocks performed quite well in October. Take 2020, for instance, when the S&P 500 saw a substantial 7.2% increase in October. Factors to consider. To better understand what could unfold in October 2023, we need to consider several factors that might influence the stock market. The Federal Reserve's interest rate policy. The Federal Reserve is expected to continue its efforts to combat inflation by raising interest rates. This move has the potential to introduce volatility to the stock market as investors adapt to this new interest rate environment. The ongoing war in Ukraine. The conflict in Ukraine has already contributed to uncertainty and economic volatility on a global scale. These lingering effects could continue to affect the stock market in October. The upcoming midterm elections. As is often the case, the midterm elections present a period of uncertainty for the stock market. Investors may be cautious about making significant investments as they await the election results. What to do? Given these factors, let's discuss what investors can do to protect themselves from a potential stock market crash in October. Diversify your portfolio. The first line of defense against market turbulence is to have a diversified investment portfolio. This means spreading your investments across various asset classes, including stocks, bonds, and cash. Avoid emotional decision-making. It's critical not to let fear or emotion drive your investment decisions. Stick to your established investment plan and be prepared to weather short-term market fluctuations. Reduce exposure to stocks. If you're genuinely concerned about a potential crash, consider reducing your exposure to stocks. You can achieve this by increasing your allocation to bonds or cash. Additionally, exploring defensive stocks like utilities and consumer staples can provide stability in turbulent times. Conclusion. In conclusion, the question of whether the stock market will crash in October 2023 remains uncertain. However, there are numerous factors that could contribute to volatility in the market, such as the Federal Reserve's interest rate policy, the ongoing conflict in Ukraine, and the upcoming midterm elections. To safeguard your investments, having a diversified portfolio and adhering to your investment plan is paramount. Additional information. In addition to the factors mentioned above, there are other measures you can take to prepare for a potential stock market crash in October. Review your investment portfolio. Ensure your portfolio is diversified and aligns with your risk tolerance and investment goals. Set stop-loss orders. Implementing stop-loss orders can help you limit your losses in case of a market downturn. Maintain a cash cushion. It's always wise to have a cash reserve on hand to cover unexpected expenses. Avoid panic. In the event of a market crash, stay calm and avoid making hasty decisions. Remember, the stock market is inherently volatile, and the possibility of a crash is ever present. Nevertheless, by taking the necessary precautions and staying informed, investors can protect themselves from the most severe financial consequences.